Good morning and welcome to IG's Early Morning Call on IG Live on this Monday, the 5th of December, with 30 minutes to go until the European market open. It's all about Italy this morning. We've already seen the bond markets open with weakness this morning, pushing yields up. We're expecting a drop at the start in the Italian markets, also expecting a drop here in London. We'll take a look at Italy in just a minute. I want to focus first of all on the London markets so that we can have a look at where we are in terms of the move that we've got. Yesterday, we saw the markets drop down. Of course, we trade on the IG platform on a Sunday, and that's where this green candle is here. We are still down on the period at which we ended up on Friday, but the market's recovering from the lows that we saw scored yesterday on from that decision by the Italian people. 60% of the 70% that voted, very high turnout, and a very high proportion of those people voted no, indicating that the Italians don't want to see more power vested in the current government and a constitutional reform, and that referendum taking place with all the details now through. And we know now that the Italian Prime Minister Matteo Renzi will go through the formal process of resignation today, as he promised he would in the event of a no vote, which is exactly what we got. So looking for a lower start in the Italian markets. We've got a lower start expected here in London as well, although not the case necessarily in Germany. Let's take a look at the European markets and see how things are moving at the moment. There we have, in fact, Germany is down a touch, but the Italy 40, look at that, on from Friday's close, down 1.5% expected at the open today. Big declines. It's not just the Italian markets that have seen big declines. I just want to show very quickly what's been happening with the euro-dollar market, if we can. We'll get some more details with Chris in just a minute on this and how things have moved in the Asian session. But you can see there, this big red candle here on the right was yesterday's trade. Here we are recovering a little bit off the lows at 106.12. Let's take a look at what's happened overnight in the Asia-Pacific markets to focus in on how those markets have reacted to the news overnight. Slightly better than expected Caixin PMI services data in China. I'll get up to speed with this in just a few moments' time, but broadly speaking, it was a very negative day in the Chinese markets, down 1.75%. You can see there 0.4% down for both the Nikkei and the Australian benchmark, the S&P ASX 200. So looking for lower closes on other of those Asia-Pacific markets. The Hong Kong market's also down, which are due to close in an hour or so. Dow Industrials on Friday closing down. We saw gains, small gains for the S&P 500 and the Nasdaq. Let's take a look at the small gains that we've got at the moment on the US markets as we head into today's trade. Now let's get up to speed with some more details about what's been happening overnight. Off now to our Melbourne newsroom and Chris Weston.
Another big day here in Asia. Plenty of news flow, plenty of event risks for traders to sink their teeth into. And again, some sort of reversals coming through in markets as well. Now, of course, all eyes have been on the Italian referendum on constitutional change. Most people had been expecting the no camp to win through and the referendum to be voted down. That has materialised, as I say. And basically, if you look at the polls, they were predicting the no camp to win by 5 to 7 percentage points on fairly low turnout. What we've actually seen is very, very strong turnout, something about 70% of voters turned out for the actual proceedings. It was significantly higher than what the market was looking for, and actually the points, or percentage point win, was about 19 percentage points over. So the polls did get it right, but they really grossly underestimated just how much it was going to happen. And you've got to say that was probably should be taken as a bit of a negative. We're going to see a process now of political instability in Italy. We're going to see the president have to enact and try and create some sort of caretaker government, or we could see early elections, which is not my base case at all, but certainly we're looking for a caretaker government to push us through, and whether that can take us through to 2018 when we actually get the official election is another situation. There's all sorts of electoral laws and changes that need to be made, but certainly if you look at the market's reaction today, if you look at our opening call for the Italian MIB, at one stage it was down into the low 16,200s, and we've seen a nice bounce back, so a lot of clients looking to buy that, believing that was probably a little bit overdone. Euro dollar traded into the low 105 region. We've seen a little bit of buy buying coming through. It's right at the bottom of that multi-year range that we've been seeing. The low point of that being into that sort of 104.60 level, where I think if you get a closing break of that, you get a move down to parity pretty quickly. Asian markets have seen quite a big risk-off move. We're not seeing too much in the way of US futures selling. US futures are holding on quite well. They're down very modestly on the day. There's no real buying of gold. Oil prices look fairly firm as well. But we are seeing some good buying of US Treasuries. So some safe haven buying coming in the US Treasury complex. And that's seeing in the equity market a lot of buying in utilities and REITs. They're the sectors that have done quite poorly as we've seen that big move up in the yield curve as well. So that's the sectors we're doing. Japanese equities down at the moment. We're seeing Chinese equities down about 1.5%. And here in Australia, we've got the ASX 200 down about 0.8%. The big news today is that we've seen the inventories component of the GDP coming out at 0.8% growth. That's going to give us about 20 basis points of upside to the GDP calculation that comes out on Wednesday. Aussie dollar not really moving for the ride. It's all been about euro selling today and looking to sell equities as well. That's going to be the issue. We'll obviously look to the European markets, the open there, and of course all eyes on the Italian banks tonight.
Okay, let's get back to what Chris was talking about, the Chinese markets. Growth in China's services sector accelerated to a 16-month high in November, according to the Caixin release, though the increase in new orders dipped slightly and business expectations moderated. There you have the numbers themselves. China's Caixin Services PMI, 53.1 after that last reading in the previous month of 52.4. The survey, along with solid factory activity readings, of course, we saw last week, which you'll remember, suggest a building momentum in the Chinese economy, despite growth stabilizing this year in China, which has flown in the face of many expectations. Economists do say an unsustainable rebound in prices is largely responsible for the recent strength. Let's take a look at this in the context of the Chinese equity markets. This is the Shenzhen CSI 300, as we said today, closing down 1.75%. That's the move that we've seen recently. It's been following this trend line up, and it's been quite a convincing follow as well. In fact, if we move that line just a little bit to make sure that we can get an accurate reading on this from the low point that we had there, you can see that actually, if you draw a line, I'm going to get a longer term on this. You can see that in fact the way in which it touched. Let's get rid of that one so we can get a better view of what's happening. You can see that it's touched this line, sometimes intraday, sometimes closing day, but this has been a good line to follow. And look at this today. We are down, and we've actually just touched that intraday. So this is technical analysis at work, where we've got this run. Apart from that one hammer candle here, where you get a big dip on one day, and that would be the 9th of November, which of course was the day in which we saw Donald Trump elected. So that was an extraordinary day in any event. But look at the way the market then pulled back and came back to where it was. So we're continuing this trend. This trend is still in place, looking as though we're at the bottom end of this. So potentially tomorrow we could well see gains. If you don't see gains and you see a candle that opens and then opens where we are and closes below this line here, then you can say this has been broken. In fact, broken probably quite convincingly as well, because we've got this big candle on the way down here, because it's mostly red. That is quite a convincing drop on the day. It means that there are far more bears than there are bulls in the market. So if we see this market open below this line tomorrow, that's a very negative sign. Where we take it from there, well, we've got the 50, the 100 and the 200-day moving averages, which are all really good support, and you can see they all come in at levels at which we've seen previous levels of support. So those are the three lines there to watch in terms of some of the support levels to watch on the way down if we get a lower close tomorrow past this upward trajectory. If this holds, then of course it's up and away again for the Chinese markets. Now, let's get back and take a look in some more detail about this Italian referendum results. The details, as we've said, coming in beyond expectations in terms of the overall turnout and beyond expectations in terms of the actual numbers of people voting no to a constitutional change. It was quite a complicated question. The yes was 40, as you can see there, but that turnout was far higher than expected. So, unlike the Trump victory, unlike the Brexit referendum, the polls got this one right, and they got the resignation expected in full confirmation a little bit later on today, and Chris was laying out where the markets then go from here. Just to quickly update you as well, today is the UK Supreme Court decision will begin a landmark legal hearing into whether Parliament's consent is required before official Brexit negotiations can begin. The hearing is expected to last 4 days, but the verdict is not due until next year. In terms of economic statistics today in Europe, it sees the week kick off with service PMIs. Like we've seen overnight in the Chinese markets, we get services PMI across the European markets today, which are broadly expected to underline a modestly improved picture for global growth prospects. It comes in the week in which we get the decision by the European Central Bank on interest rates. I'm just looking down at my terminal so we can get a euro quote for you here. First, I'll go with the daily quote. This goes back to what Chris was talking about, really. And if this line holds here, which at the moment it is broadly holding at the 105.25 level, or currently 106.08, if this continues to hold, then that remains really good support. And you can see going back to 12th of March 2015, and then again April 2015, there again we got support there at 2nd of December last year, and here we are again at this number again. This is where technical analysis really does work, and you can see that bouncing off this level is significant. What we're going to see is if you want to take this lower, as Chris was talking about, potentially some strategists are now talking about parity, which is this dotted red line here. If you want to see parity as the next strike, and you are expecting that, you really want to make sure, first of all, that you get a decent candle close, a daily candle close below this level here at 105.25. If you get the decent candle down, what I mean is I'm talking about a large-bodied red candle, or black if you use the black and white system, and the idea is then you can take the market on further on down. Let's look at the hourly chart for euro dollar to get a better feel for what's been happening today. And you can see, as Chris was saying, the bounce back. We are now just below the 200-hour moving average, where we are seated at the moment at 106.03. So that's a small recovery in the euro dollar. Waiting for the details of the European PMI services indices, and also the UK as well at 9:30. The UK's number is forecast to shrink marginally from October's reading of 54.5 to 54.2, with the backdrop of uncertainty as to where things are going. And as I said, it's the Supreme Court's decision today to look back at the initial court decision to suggest that the government does have to go through with an act of Parliament and a vote before enacting that vote of Parliament to go ahead with the referendum promise of a Brexit vote. But the government, nonetheless, we're hearing that want to go ahead with that Article 50 trigger in March or April next year in any event, and want to find a way to do it themselves. Let's look at what's been happening at the moment for sterling with the move up that we've got, and that's still holding the move up. We are at the moment trading at 126.97 for sterling. This is an hourly chart to get a better idea as to that move up that we've seen recently for sterling, and it's been building on what we've seen on from the low point that we had on the 28th of October, and it's a gradual building for sterling at 126.98 at the moment. We still continue to have the support at 124.62. Upside resistance coming in at the blue line here, which is the 100-day moving average. Go back to the hourly chart, get a better handle as to where the money's going today, and you can see continues to build. Just one interesting move to see, we'll find out just what's going on in the foreign exchange markets for sterling against the euro, to get a better idea as to move up that we've seen. This is the daily chart. Not much move overall for sterling against the euro in today's session, but like against the dollar, it is a steady build for sterling. We're just on the 200-day moving average at just around about the 120 level for sterling against the euro. Just one company I want to highlight today, and that is Wizz Air. The company has, interesting enough, come through with a very positive September statistics number. So it's the details of the traffic statistics. Wouldn't normally cover this, only the company has come through with a very positive note this morning, and it's really as a result of what's been happening for Lufthansa, the pilot strike, and you can see how quickly that other airlines benefit from this. Wizz Air November 2016 traffic stats grows passenger numbers by 19% in the month of November. Load factor increased 3.2 percentage points to 87%. This is the daily chart for Wizz Air. You can see here quite clearly the referendum point. We still haven't made up the difference here. But you can see in the last couple of days the way the stock has moved past the 200-day moving average convincingly, and will open today at 1754 when things get underway. We're almost overbought on the relative strength index. Just a quick update on terms of some of the other, or one of the metric I want to take a look at, the MACD. You can get a better feel for what's happening with this stock, and you can see that the histograms, the green histograms, are beginning to build again. This is the distance between the red dotted line and the blue line. Just a couple of days ago, it looked as though we were going to see a crossover, and that would have been negative had the blue line disappeared below the red line, and it didn't just quite do that. It's opened up again the last couple of days, and with these numbers out this morning, which are broadly positive, looking for an expansion of this, and likely to see this continue. And so long as the blue line remains in front or over the red, you've got a positive picture for Wizz Air, and it's certainly looking as though we could well see positive out of this morning's numbers this morning. Just one stock to watch. Just a quick update as well on what's been happening with gold. I tweeted about this earlier this morning. The price of gold, one might imagine in times of worry, would see a gain. In fact, in today's trade, we are down for gold. Over the weekend, it did build. Just yesterday, we saw a little bit of an uplift for gold, but it's pulled back again. We're at 1171.1 this level here, which is support from a previous touch on this point here. So 1172.2 is where gold is at the moment. It is oversold, but well, as we know, it's waiting for a break of this level to take us lower potentially. Let's get rid of that and get a better idea as to what's been happening on the hourly chart for gold overnight. And you can see that over the last couple of hours or so, we have sunk again, expecting further declines for gold. Doesn't look like that's going to load up in the near future. But just look at the gold price. I think we can have to leave that, unfortunately. But the gold price continues under pressure, as indeed is the case for many of these markets. Looking for Italy to open today with weakness on from Friday's close. One of the main stocks, one of the main news headlines of the day, and that is the Italy vote overnight, which is going to steer markets certainly for the first part of today. That's it. Before letting you go, just one last look at the equity markets. We do have at the moment, we've got small losses here in or big losses now, 0.5% down in the FTSE 100 markets. We had small losses in the German 30 as we go into the start of today's trade. In 15 minutes, we're down 0.25%, but you can see the Italy 40 cash down almost 2% on from Friday's close. That's it. We're back at 10:30 with Charting the Markets.